All right, everyone, welcome back for the episode of Carnivore Trade. Today is Wednesday, October 25th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it too. Let's get into it here today. So markets, pretty good bloodbath. So down 1.5 on the spiders, triple Qs down 2.5, and the Dow down 0.25%. Russell bringing up the rear there. But not devoid of the action either. We did have some earnings, obviously. So yesterday we talked about it a little bit with Microsoft gapping up 3% on the day. It did come off the highs. The big loser really was Google, down almost 10%, finding some support around 125. Everybody's looking at that gap, so not surprising it didn't quite get there today. It might get there, tomorrow, over the next couple of days perhaps. But Google coming in, and one that not a lot of people talking about though, Texas Instruments down 3.5. Ugly chart there. That does get interesting to me around 130, but right now that led to chip space down. And you definitely don't want to close below that pivot from last July on a weekly. That would be a big negative for TXN. It is oversold. So bear that in mind. But bringing all those chips down, take a look at AMD. That's got to hold that 95 handle. Micron, pretty good engulfing reversal there. And of course, everybody's favorite, NVIDIA down 4.3, still flirting with that trend line there. So again, chip space in a lot of trouble. Meta is reporting after the bell here. And let's take a look. We'll throw up our after hours on there. And I don't think they're out yet. If Meta reports and misses big, it's going to be kind of a gut shot to this market. They got slammed all day long and really was unable to get anything going. We gapped down. It's kind of a gap and go, little retrace, and then just a grind lower all day long. The VIX really, see VIXy there up 6.3, and the actual VIX up 7.3. But this is not, I wouldn't call this panic by any stretch here. It's just kind of a bleed lower. And on the spiders, if we take a look on the daily, you're going to see we did, we made a new closing low here, and you can see the low here, 417.80. We made a new closing, we closed below that pivot from Monday. Remember when everybody was mocking everyone for saying, haha, Black Monday, that didn't happen? Well, we've already taken that low out. Again, not to say that we're going to necessarily crash or anything. But at this point, you definitely can't rule anything out. And normally I don't even like to entertain those ideas because it's just so clickbaity and cliche. But honestly, you have to look at, the regional banks here. KRE did come back off the lows, held that 38 handle. That was important. Still closing red though. And, this was getting hammered earlier on in the day, kind of led the market lower. And, I've noted this lately, but every time Bitcoin runs like this, or at least the last time we ran this big, that was in, the last time we had a kind of a volatility event with the regional banks. And you look at yields here, we had an auction today. I believe it was 5s, 2s, and 17-week. Take a look at the 5 intraday. That was up all day long. It powered up. A lot of the time it's a sell the news in that event. When you're up into a volatility event, and this kept going and it's held the gains. 10-year kept going, held the gains. 30-year kept going, held the gains. 2-year yield kept going and it held the gains there. So again, yields up across the board. Again, I'm saying this stuff because, at some point, the rate of change with yields is going to break something, right? So, and we have tech that has catching up to do the downside potentially. Now, tomorrow doesn't mean that this can't get saved. Doesn't mean it can't be a fake out. We have PCE on Friday, and we have the Fed next week. So maybe we sell off into those. Maybe that's kind of the low. Certainly could be the case. Right now in the near term, going back to the spiders, I think at least 415 is in play. And you can see kind of this down-sloping trend line here. I tried to look for this. It's not quite, I can't really quite call this a falling wedge. So unfortunately for bulls, I can't really call it a falling wedge, but it is kind of a divergent low. But right in that 415 area, there is some pretty good support. That could be a thing here. Again, the 200 moving average was reclaimed yesterday, and we closed right back below that, made a new closing low. I think at this point, and I'm going to use the SPX because I like the levels better, but I think 4150 is probably at least the near-term target. That doesn't mean that that's going to be the final low. It certainly could be. But you're going to see, and it's been a gamma level too on the 0DTs. They keep targeting that. And usually when they do that, they get it. So I think that's where we want to go here, at least in the near term. That could be a final low. It doesn't have to be. But that is an area that I've got penciled in on the SPX. Maybe we hit it tomorrow and then we bottom on PCE. Maybe PCE is terrible and bonds bid, and that's the end of it. But short term, that's kind of what I'm looking for. So yeah, definitely a crazy market. Let's take a look at Meta here. So Meta taking a hit. All right, looks like their earnings are just out here. Let me take a look at the ES. Yeah, so it's fractionally lower. I'm sure NQ, yeah, NQ making a lower low. So again, this is right off the bat here. This could power back up in at any second, and they could also, conference call could change things. But again, that's kind of a gut shot there if that continues lower. But bouncing back up to 295. We'll check back in on that later. But again, pretty good down day for the markets, and I don't think we're near panic yet. However, I will say it is, my timeline, Twitter, all that stuff, getting a little bearish out there. Seeing a lot of dunking going on. So keep that in mind as well. And we're at that point where at any time we could get a 100-point squeeze. Like that can happen here. We could also see another 100-point sell-off. So we're in that kind of environment. All right, I want to talk about the triple Qs here. So we did slice through this trend line and we closed below it. That is a new closing low going back to June. So that's a big deal there. Now this trend line here, right? Trend lines are art. They're not science. So nothing to say this couldn't be the trend line, right? But we do have 1, 2 pierce, 3, 4 hits, and then another pierce and a close above. So that to me tells me that means something, right? So I'm going to go with that just because there's 5 or 6 hits on it versus this one, which would only have 2 so far. At this point, does it feel like that 200 moving average is a magnet? It certainly could be. But the danger I have now, again, tomorrow we could gap down and then just do one of these. There's nothing to say that doesn't happen, right? So again, like I just said, things are getting, sentiment-wise, getting pretty bearish out there. I can't rule that out. But I will say, if we close below, this area on a weekly, I just don't really see any support. And I've said this for months now. I said you did not build support on this whole way up. And just so you guys can visualize that, what I'm talking about, if you just look at a volume profile, you break that level. Your 200 moving average, okay, you got a gap there. But really where the volume kicks in is around 320. So that's why I've been saying that for such a long time. But again, just because we break below it doesn't mean we're going to continue lower. They could gap it down tomorrow and rip it back up. I've seen that plenty of times as well. So just keep that in mind. But new closing low. By the way, lastly, before I forget, on the SPX, this is my new master level here. And so that's going to be 41.71 spot 64. And that is that monthly green bar right there. If we close below that, because I'm saying this because we have 4 days left, so we're in that territory right now. If we close below that, then the bear case gets a lot more bearish. But right now, we're just going to give the market, we're just going to be neutral here. You can't open a fresh short down here. That would be suicide. But going long is a little tough as well. If you wanted to go long, you got to just leg in with like 1% at a time. Anyways. So we talked about the Qs, Russell 2000, still under pressure, new 52-week lows, and we're coming up on multi-year lows, really. You got double bottom, 162.50. They could easily get there tomorrow. If we break through that, we're going substantially lower. I've already got levels done on that, but we'll talk about them if and when we get there. But IWM, in a lot of trouble, still can't get out of its own way. Again, the rising rates do their thing on small caps. It is a little short-term extended, so nothing to say it can't get a bounce, but every time this has been a bounce, it's been a selling opportunity. Diamond here, again, down a third, again, more of a risk-off index, and it's showing that. By the way, Boeing did report today. Look at that gap and crap there, new lows. I told people to avoid this. Close below that green bar on a monthly. That's not a good sign. That may need to go to 160. But Diamond here, again, gap up and then a crap. Good news is you held yesterday's low and you're holding this low. But ultimately, if the market flushes down, it's going to 325. Semis you already touched on a little bit. 200 moving average will be support in the near term. This is a parallel channel too. So that could hold. We could, maybe we gap down in tech tomorrow and then we rally back up. We close green. Ultimately, I still think it needs to go here, whether that's next week or next month or sometime next year remains to be seen. But ultimately, I think that's where it wants to go. Markets have a way of round tripping these things, especially when you have a gap on euphoria. IGV, so not good. So we had a nice reaction off of our little wedge there, and we sliced that down. By the way, I think ServiceNow reporting. So that's actually getting a little bit of a bid. That's up 30 points there. So a nice little pop there for ServiceNow. That'll help the IGV out. But down 2.6 here on the day. Got to hold this pivot here on a weekly close, as you guys know. Otherwise, we're looking at 315, 317. Transports here. So this is interesting. This is, believe it or not, this is actually kind of a point for the bulls, even though they got bludgeoned today, down 2.5. But we did get to my target level. And you have a lot of weekly support here. So again, bearish pattern, and then it failed. There should be institutional buying pressure sitting there. And we also sliced this trend line. You know, if you close the week back above it, that could be considered a defense. I want to talk to you about this because if the transports, let's just say the transports bottom tomorrow and the spiders keep selling, that's telling you the bottom's close. That's what happened last year. It's what happened many times in history. You know, we can look at, you know, going back to COVID, transports put in that lower high, the spiders had a higher high, right? This is kind of how it works. Transports are a leading indicator if you know your Dow theory. But again, going back to last year, bottom was in September, right? And spiders, bottom was in October, right? So just something to keep an eye on. But again, DJT getting smoked. I do like this level of support. We'll see how it reacts tomorrow. Maybe it goes a little bit lower. Nothing to say that can't happen, especially if we do start to see the VIX take off. You know, then kind of all bets are off there. But transports are into that level now. Interest rates we already talked about a little bit. But again, all right, so there's the dollar, and the dollar, a nice flag pattern. We talked about that yesterday. We'll get into that in a minute. But again, 2-year here. That was up again on the day. Nothing great, nothing terrible. But again, holding trend. Again, the big level is 5.33. If it gets above that, it's a big problem for the market. 2-year, or excuse me, the 5-year, still holding up. Again, it makes new highs. It's going to be a problem. And same thing with the 10s and 30s. I think 10s and 30s probably want to go to parity with the Fed funds. So that'd be 5.25 to 550 or 5.33 exactly. I think the problem is if the 2-year gets up there, then that's a really big issue. But right now, I think that's where they want to go. I've talked about this the last couple of days. You know, everybody called the bottom in TLT on Monday just because we had one counter trend rally and one hedge fund player shorted or covered as short. That doesn't mean that Bill Ackman is a technical genius and he covered the exact low. It just means he sees that risk is, you know, possibly to the upside for bonds. I think that's also the case, but that doesn't mean we can't have a little bit more downside first. I just talked about the parity with the Fed funds rate. You know, a lot of the time markets just want to test that. So it wouldn't be surprising to me to see the 30-year go up and touch that before pulling back in. But again, we'll see what that PCE data does on Friday. Anyways, XHB, another bloodbath there. That's going probably to that 68, 69 handle. So I've been talking to you guys about 70 for months. We got there today. I think we can go a little bit lower right into this pivot. And again, to show you one more time, look at that weekly support there with that big breakout tail. 100-week moving average. That's a really good level there. I think there's a fib as well. So if we go back to the lows of last year, yeah, there's your 50% fib. So that's actually a pretty attractive level there for the XHB, at least a tradable level. Doesn't necessarily mean it's a final low, but there should be a lot of support there in the near term. VNQ, oh, look at VNQ making new lows. What else is new? You know, they got to save this, but they got 4 days to save that 200-month moving average. That's just not good any way you look at it. There's the weekly look. There's a gap down here at 68.80. That's really the best I can give you right now, maybe $70 whole round number. And yeah, that's it. XLF here down 37 basis points. This actually held up a little bit better today. I believe Berkshire probably doing a lot of the work there. Yeah, Berkshire only down, 0.5%. JPM, Bank of America. Yeah, Bank of America managed to be green. Wells, Citi. So some weakness there. We talked about KRE, that was down 14 cents. KBE down 17 cents, trying to hold that 34 handle. There's a little pivot right there. So maybe some daily chart support in the KRE, 36 whole round number. This kind of a minor point of control in this area. So it did get defended, but nothing to say this doesn't rally back up to 40 and then go right down to 36. I don't like what it's doing, to be honest. Broker dealers here, where did it go? 450. Been telling you that's where it wanted to be. And it got home there. So right now should be due for a bounce. If it gets through that, then right down to 440 is your next big level. On the upside, 470 to 475. Over to crude here. So crude managing to scratch out a nice gain, up 2%. And I still think crude is just in weekly consolidation right now. A lot of people were calling for the demise of crude, and we got below this trend line here, and we closed right back above. So again, a lot of people getting on one side of the boat. Bonds are bottoming, right? So you go short crude. Sometimes it doesn't always work that easily. Good volume there too. So crude in a range right now. Again, if you take this pivot out, you'll have some that trend line support, which again goes all the way back here. But after that, it's into the mid 70s. If it gets back up here, your top side targets are like 92 to 94. But I still just see this as weekly consolidation for the most part. XLE, same thing, just leaving this thing alone all over the map. XOP is a little more stable and holding up better. But again, not touching it. OIH, possible little diamond reversal there that we talked about yesterday. It's not, obviously, we could say that this is like, could line this up better. That's not really the point. The point is that the pattern is still that kind of look there. I'd say if you start breaking below 320, then the pattern's triggered. And obviously below 318.12 on a close, there's a big air pocket here down to 290, right? So again, talking about not building support. So it's just something to keep an eye on. But yeah, energy hanging in there. CCJ still holding up. That I still think is due weekly consolidation. Same thing with URNM. I'm just leaving those alone. Nat Gas with a nice day, up just under 2%. Needs to reclaim that 303 handle and then get above 309. Those are your big levels there. Dollar index we talked about yesterday. So again, just peaking above that trend line there, and you're back above the 20 moving average again on the daily. So trend is back up here on the dollar. If you can get through 107, that's going to get interesting. And then obviously the pivot high at 107.35. If you can get a weekly close above that, and especially a weekly close above 108, then it's going to 109. Really, it's kind of that simple. But right now, I don't see any problems here with the dollar. You went into weekly resistance, and what are you doing? Are you selling off? No, you're just consolidating. So there's no real problems right now. Just keep that in mind with the dollar. Gold, same thing, just doing some consolidation here at the 2,000 handle. You might say, why is gold and the dollar going up at the same time? They don't have to go down and trade inverse. There's been plenty of times where gold is traded up with the dollar, especially in extreme risk-off situations. We have lots of geopolitical problems going on right now, and the dollar is holding up. I thought the BRICS were going to overtake the dollar. Why is the dollar going up when all there's geopolitical problems? Oh, gee, maybe because people would rather have the U.S. dollar as their counterparty than China or Russia. I don't know. Anyways, gold here up 0.25%. Still consolidating beneath 2,000. If you can get through that, then it's up to 2050. But we'll see. I might still need to pull back to 1,900. Silver a little bit on the weaker side, still holding up though. Again, remember, more of an industrial component there. Pattern-wise, it's fine here, and it's just consolidating. I own it, but I wouldn't add to it. Platinum here, up 2.38, so nothing terrible there. I still think that wants to have one more dip. And then palladium here, that still needs another dip. And copper rejecting that 20 MA break. Again, I don't really love the pattern. You guys know where I think it's going. All right, Bitcoin, so still holding up. And again, it's been kind of the same story. Every time this pumps, something happens. But again, lots of resistance at 35K. We can flatten this out here. There you go. Lots of resistance at 35K right now. And it is very overbought here in the short term. So it does need to do some backing and filling. I would not chase it up here. If you want to own it, probably wait for, at least 31.5, maybe 30,000. But we'll see what it does here. It's acting well. I can't really say anything poor about it. But again, remember, this is the lead dog, and it's acting like the lead dog. And we're not seeing that kind of, it's not a broad sector rally, right? It's just Bitcoin. So it does indicate to me that it's more of some type of a risk off move or a signal of risk off. As you're not seeing the whole sector run, and we're not seeing those miners run. Certainly not with those high interest rates. Anyways, back to the spiders. So again, I think tomorrow, let's take a look here at Meta. Futures are actually higher here. Look at that. See, I told you don't want to jump on it too quickly. So right back up there, right back to 310. So you basically are flat for the day. All right, so we closed at 312 yesterday, and we're at 310 right now. So we're basically flat to where we were yesterday. Let's take a look at the NQ. So getting a micro bounce there. I don't know if this is enough to save the market. I think we have GDP and retail sales tomorrow. So let me just double check on that. I know we have jobless claims, obviously. The big one is PCE on Thursday. Okay, yeah, so we have GDP, durable orders, initial claims, continuing claims. Yeah, retail inventories, pending home sales. So we got plenty of data tomorrow, but obviously PCE will be the big one. It's a nice bounce here after hours for Meta, but I think you got to test 415. That's kind of been my target for a little while here, at least minimum, and satisfy this downsloping trend line. But again, don't take anything for granted. They could gap this down and rip it right back up. Again, there's lots of bears out there, so that always gets me, gets my antennas up. But at the same time, when you have a bear phase, there's nothing to say they can't, pull this up, gap down, rip it back up to this area, and then break it right back down. Just be aware of that. We are going into the Fed next week. If we trade up into the Fed, who knows? Maybe they rip us down. Anyways, I'm going to wrap it up here. You guys take care. Thank you guys for watching. Come find me on carnivoretrades.com. I will talk to you guys all tomorrow.